Let's talk about the future, specifically Morgan Stanley's bold predictions for 2026. When a financial giant like Morgan Stanley speaks, investors listen. They manage trillions and have a front-row seat to global trends. Their latest report is like a sneak peek at the economic playbook for the next few years. We'll break down their top 10 predictions, from the global economy and AI to interest rates and investment strategies. This isn't just theory. These trends could impact your money, your job, and your financial future. Whether you're a seasoned investor or just getting started, understanding these shifts is crucial. So grab a notepad. These insights could help you make smarter moves and avoid getting blindsided. Let's dive into what Morgan Stanley sees coming around the corner. First up, slower global growth. Morgan Stanley sees the global economy shifting from a sprint to a marathon. The post-pandemic boom is fading as stimulus dries up and interest rates rise. This moderation is normal. Think of it as the economy catching its breath. Now, it's about being selective. Focus on companies with strong fundamentals. Defensive sectors like healthcare and consumer staples could outperform. The message? Quality over speculation. The era of easy money is on pause. Now it's about strategy and patience. The winners will be those who adapt to this new, steadier pace. Get ready for a marathon, not a sprint. Next, Morgan Stanley predicts U.S. inflation will return to the Fed's 2% target by 2026. After years of high prices, this would be a huge relief for consumers and savers. The Fed's aggressive rate hikes are working, supply chains are healing, and demand is normalizing. Lower inflation means your money holds its value better and businesses can plan with more certainty. For investors, this shift could make bonds attractive again, restoring balance to portfolios. Stable inflation also supports steady growth and less market volatility. It's a win for long-term planning and a sign of economic stability ahead. The bottom line, a return to 2% inflation sets the stage for a healthier economy. It's the foundation for the next phase of growth. With inflation cooling, Morgan Stanley expects central banks to start cutting interest rates. Lower rates make borrowing cheaper, encouraging spending and investment. This is typically great news for stocks, especially growth in tech companies. The housing market, frozen by high mortgage rates, could thaw as rates drop, boosting affordability and activity. Rate cuts signal a shift from fighting inflation to supporting growth. For investors, it's time to rethink strategy. Defensive plays may give way to more growth-oriented bets. Cheaper money can reignite markets and drive economic momentum. Watch for renewed interest in sectors that benefit from lower rates. The pivot to rate cuts could be a major catalyst for both stocks and real estate. It's a green light for economic expansion. Get ready to adjust your portfolio for a new environment. Morgan Stanley predicts China's economy will rebound by 2026. After a rocky period, China is expected to unleash more effective stimulus and support the property market. Tech giants like Alibaba and Tencent could benefit if regulatory pressure eases. A stronger China means higher demand for commodities, helping countries like Australia and Brazil. Investing in China is high risk, but the potential rewards are significant. China's rebound could be a game-changer for global markets. AI is set to drive a major productivity boom by 2026. We're not talking sci-fi robots, but real-world AI tools making businesses faster and smarter. From software development to marketing and manufacturing, AI is streamlining operations and cutting costs. This productivity surge means higher profits and helps keep inflation in check. The biggest winners: companies building AI infrastructure, chip makers, cloud providers, and foundational AI developers. But don't overlook businesses that use AI to transform their industries, healthcare, finance, and more. The opportunity is everywhere, not just in tech. Early AI adopters could see outsized gains. For investors, spotting these leaders is key. AI isn't just a trend, it's a cross-industry revolution. The green energy transition is set to accelerate by 2026. Massive government incentives and rapidly improving technology are making renewables mainstream. Solar, wind, and green hydrogen are attracting trillions in investment. Costs for clean energy are dropping, making them competitive with fossil fuels. Investment opportunities go beyond energy producers. Think battery makers, grid upgraders, and critical mineral suppliers. The entire energy ecosystem is being transformed, from raw materials to infrastructure. This isn't a niche play anymore, it's a structural shift. For investors, it's time to look past oil and gas and find the future leaders of the new energy economy. The demand for clean energy and supporting tech is only going up. The green wave is creating long-term tailwinds across industries. Get ready for a decade of growth in renewables. Morgan Stanley sees emerging markets outperforming developed ones by 2026. Why? Younger populations, growing workforces, and a rising middle class fuel long-term growth. Supply chain shifts, companies moving operations to places like India, Mexico, and Vietnam, are bringing in investment and jobs. If U.S. interest rates fall, emerging markets benefit from a weaker dollar and increased capital flows. The potential for higher returns is significant, though risks remain. You don't have to pick individual stocks. ETFs and mutual funds offer diversified exposure. The key is to look beyond your home market for growth. In a world of slower growth in the West, emerging markets are where the action is. Demographics and geopolitics are tilting the scales. It's time to think globally. Despite slower economic growth, Morgan Stanley forecasts strong corporate earnings by 2026. Why? Companies are expanding profit margins as inflation cools and supply chains normalize. Many price hikes are sticking, while costs are stabilizing. The AI productivity boom is also slashing expenses and boosting efficiency. Tech, healthcare, and financials are expected to lead the charge. The focus companies with strong competitive advantages and early AI adoption. For investors, this is a bullish signal. Well-run, innovative firms can thrive even in a slow-growth world. Stock picking and sector focus matter more than ever. The market will reward efficiency and innovation. Look for companies with moats and margin power. Strong earnings, growth is the engine for future returns. Not everything is rosy. Geopolitical risks remain high. US-China tensions, the war in Ukraine, and Middle East instability all threaten market stability. Political shifts like the US election can quickly change the investment landscape. Investors can't predict these events, but they can prepare. Diversification is your best defense. Don't put all your eggs in one basket. Consider assets that hedge against uncertainty, like gold or the US dollar. Focus on companies with flexible, diversified supply chains. Acknowledge that uncertainty is part of investing. Build a resilient portfolio that can weather shocks. Stay alert, but don't let fear drive your decisions. Morgan Stanley's final prediction. The best opportunities will come from structural shifts, not fads. The world is becoming multipolar. Growth is global, not just US-centric. Look for regions benefiting from supply chain shifts and rising middle classes. The intersection of technology and traditional industries is huge. Think fintech, health tech, and climate tech. Legacy companies that reinvent themselves with new tech could be big winners. Demographic trends, aging populations in the West, booming middle classes in emerging markets create new demand. The biggest gains will come where these trends converge. Think thematically and look for companies riding multiple tailwinds. The future belongs to those who spot the next wave early. That's Morgan Stanley's roadmap for 2026. 10 predictions to help you navigate what's next. From slower growth and cooling inflation to AI, green energy, and emerging markets, these trends will shape the next few years. Use these insights to guide your investment strategy and stay ahead of the curve. The key is to stay informed, adapt, and always look a few steps ahead. What's your top prediction for 2026? Drop a comment below. I read everyone. If you found this valuable, hit like, subscribe, and ring the bell for more deep dives. Thanks for watching. See you in the next video.